David Tepper, the hedge fund legend who once told the world to buy China, everything China, just did the opposite. In his latest 13F filed in May, he cut his biggest China bet by a third and moved the money into an American power company, more than doubling the stake. Wall Street read the dollar figures and shrugged, but the dollars hide what he actually did. By the end, you'll know the one number that reveals his real conviction and why it is not the dollar value everyone quotes. First, what actually changed? For years, Tepper's largest single position was Alibaba, the face of his China trade. This quarter, he sold a third of it. At the same time, he nearly doubled Amazon, and he built a very different kind of position. Vistra, an electricity producer, now more than 2 million shares. Add it up, and the picture is clear. Capital rotated out of the China reopening story and into American AI, and the power that runs it. That part is real. The trap isn't how big you think the Vistra move actually was. Here's the trap. Look at Vistra's dollar value, and it rose 99%, from about 152 million to 304 million. Impressive, but not shocking. Except a 13F dollar figure is two things multiplied together, the price and the number of shares. And Vistra's share price actually fell over the quarter. So for the dollars to still climb 99%, the share count had to jump by much more, from 945,000 to just over 2 million. That is 114% more shares. He didn't just add, he bought aggressively into a falling price. The dollar figure understated his conviction. So, why would a distressed debt legend pile into an electricity company? Rule out the easy reads. Not a boring regulated utility. Not a bet on falling interest rates. Not just another way to own AI chips. The one that survives is this. Artificial intelligence runs on data centers. Data centers run on enormous amounts of electricity. And in deregulated markets, an independent producer like Vistra sells that power at market prices. That's the thesis. And the one variable that decides whether it works is simple. Does AI power demand actually outpace new supply? Or is it already in the price? If it's already priced in, you're paying a growth multiple for a cyclical utility. So, here's the model to keep. When a famous investor's 13F crosses your feed, don't stop at the dollar value. It blends price and shares, and it can hide the real move. Strip the price and read the share count. That's what shows true conviction. Tepper more than doubled his Vistra shares while cutting China. Then ask the one question that decides any thesis. What single variable has to hold? For AI power, it's demand outrunning supply. The direction and the conviction are real. The dollar headline is theater. This is educational analysis of a filing, not investment advice.